now.
Welcome to Vishal and Company, where Equity Guru's own Vishal Tura, Taku Ndachena, Colin Botrell, and Maddie Grace examine the week's financial events in real terms, bringing the esoteric blur of public market activity into sharp focus. So come in, sit down, put your feet up, and enjoy.
Welcome to this week's edition of Vishal and Company. This week, Vishal is going to give us some quick weekly market updates. He and TK are going to talk about jobless claims in Canada soaring to nearly 1 million, the Bank of Canada cutting interest rates, oil, Bitcoin, Blackberry, Gamestop, everything you can think of that happened this week will be discussed. And we have Colin back this week who will finish off with an update on cannabis stocks. I'm the resident not finance person to keep all of them in check when they start making not a whole lot of sense for my non-industry friends tuning in. Okay, Vishal, take her away.
All right, thanks, Maddie. So I would say in terms of the equity indices, it was a bit of an uneventful week. This is the daily chart, and as you can see here, Monday, Tuesday, Wednesday, Thursday, and now Friday is when we're actually seeing some sort of break. But basically what we've been doing this entire week has just been ranging between some highs and lows. And price has just been bouncing off of those levels. You'll see here as well on the NASDAQ, the same thing, and also on the Dow. I mean, the Dow is very obvious here, except our small cap index, the Russell 2000 in the United States, continues to make new highs, and now we are beginning to see some selling pressure. But I just want to take you guys down to the 4-hour chart. This is what we've been watching over on the Equity Guru Discord trading channel, or the trading group, sorry, but we've been watching this range on the 4-hour and we've been waiting for a breakdown. And once again, we wait for candles to actually close to give us the trigger. You can see here, and I'll just draw the little arrow, but I mean, it's a pretty big wick. You should be able to see it. Price had a pretty big fall today. And it did look like the market was going to begin to tumble. We were just waiting for that close. And, you guys hear me say this all the time, but we do wait for candles to close before entering, because if we do chase this, this can happen, right? Price can reverse, and now we're caught on the losing side. And, whether this is price manipulation or whether this is people buying the frickin' dip, really strong price bid action here on the equity markets on the 4-hour. And look at these candles, right? 4-hour candles on NASDAQ, and even on the Dow. They got the Dow, they actually even got it to close green on the 4-hour for the Dow. Quickly on gold, not really much happening here, really. We do still think gold probably tends to move back down to the 1800 zone. We talked about this weekly setup from last week, and again, we are just waiting for that weekly trend line close. Might not happen this week, obviously. Maybe it happens next week, maybe a week after. But basically, as long as we stay above 1760 on the weekly chart, we are still looking for higher prices in gold. The story, though, has been, well, before I cover the US dollar, let's take a look here at oil. Galen, you probably remember this back in the day, but we were watching oil when it hit zero, and we did call this head and shoulder pattern way back in spring of last year. And ever since that pattern, oil has been in an uptrend. We did range for a bit, but we have hit, and if I zoom out on the chart, we have hit $53 here on the US West Texas side. Major resistance zone. Again, what resistance is a price ceiling. Generally, price makes its way up there before people either take profits or we see a reversal of a trend. And what we are watching over on the Discord group is a topping pattern. In this case, for oil, looks like an M shape, but basically what we call this pattern is a double top. And then going to Brent crude, you guys probably have seen this pattern so many times if you watch the show or if you read my work, but it is our favorite head and shoulder pattern, with the head protruding out here in the middle and a shoulder on the left and a shoulder on the right. But once again, we wait for these closes before we enter the trade. So oil is what I'm going to be watching for next week. And of course, a lot of people were looking at oil because vaccines are here, things are going to reopen, people are going to be able to fly again. But we'll take a look at that when we talk about the jobless claims. I know, TK, you like to talk about the dollar, and I've been warning about a bit of a relief rally in the dollar, at least, right? So again, we have our famous head and shoulders pattern here. Let me maybe clean this up for you guys here. But we do have the head protruding out, the left shoulder and the right shoulder. So TK, is this a relief or is this now a new dollar rally?
That's a good question, man. I was thinking, what you're talking about, people moving into equities, right? And a lot of the time you do that only by, accessing US cash.
Cash, yeah.
Even if it's gold or oil, you have to go oil, any commodity, most commodities,
Yep.
outside of maybe canola oil and stuff like that. You have to access US cash to buy that. And that kind of demand with quote unquote manipulation, there's no actually better word, or federal the Fed's influence as well.
Yeah.
You can really tell what signal the US dollar index is giving us. The best thing, and Vishal's always looking at this, I always look at, is the 10-year bonds.
Yep.
And we're back at 1.93, I think, year to date return for the bonds. And it's not indicating the same thing that we're seeing in the market. So it's kind of all these confusing parameters with jobless claims coming in, a weakening dollar, and then a strengthening dollar, and then higher equity prices. You can't really get a grip of where things are going.
Yep. So just quick recap on the technical side. Did talk about this major weekly level on my market moment, and if there is going to be a reversal, this is where it would happen. I do see price, or if the dollar, going to 92 at least, and then from there, do we continue the momentum lower, or do we get a close above 92, which will nullify this downtrend? But perhaps with the dollar strength, TK and Colin, do you guys want to comment about what we're seeing in the crypto market? Again, Bitcoin versus the US dollar, that is, that's the pair most people look at. But you can see here, maybe with that dollar strength, do we see the dollar gain against Bitcoin, which basically means, a fall in Bitcoin?
I strongly believe that's what's going to happen.
Yeah.
I think with most bubbles, not calling Bitcoin a bubble, but I'll use the term. There's three phases to the bubble. There's those who catch on early, then there's those who pick up a little bit halfway through, and there's the marginal buyer at the end. They probably got damaged by the asset before, and they're getting in because they've been sitting out for a couple months, a couple weeks, and they want to get into it now. And it kind of goes back to what the demand for it. If it's able to continue to sustain such a high amount of demand, then we might see some price stability.
Yeah.
But I think for now, even if it does become a hedge against equity market, you're always going to experience a higher standard deviation of volatility from it than majority of asset classes. But that's just because a lot of the people who do use it for speculation. So there's not a lot of people who are actually investing in it. There's only a few I know, outside of Vishal as well. There's just a few other people I know who do actually invest in it, and they believe in the technology behind it and the digital coin and etc. But most people are just trying to make a quick buck.
Yeah. Yep. So the levels that we're working with here, you can just see I drew them out, but we do have interim support here around 30,000, and of course, previous highs here at 41K. Now, I'm not going to say this is going to happen, but what I would like to see, and you guys know, whenever we see breakouts, we tend to see price retrace all the way back to retest that breakout zone before continuing higher. And what I would love to see is Bitcoin actually fall and pull back to 20K. So yeah, a move from 41K back down to 20K would be a 50% decline in, a few weeks or a few months, depending on how long this takes to play out. But that would just meet market structure. And it would sort of move like a normal market. And I know, I put normal in quotes, right? Because it would still be quite
What's a normal
volatile.
market?
Yeah, with a 50%, decline. But that's, technically that's what I'd love to see. Does Bitcoin do that? I hope so. But we'll continue to watch this 30K level, which seems to be a major zone of support. As you can see, price did bounce here, not once, not twice, but 3 times.
3 times.
I just got a quick question, guys, from one of our viewers. Just asking, how do you all feel about the valuations and the BTFD we see? I had to look that up because I had no idea what that meant. Since the value of equities could just be worth what people are willing to pay for it, can't see the market really shooting higher?
A lot of people, it's probably won't be seeing it right now, but for the next 10 years, we might experience the lowest returns we've experienced since the last 40 years. And on average, most people think 10% or whatever the number is, the arbitrary number we use now is, but it's been way lower, net of inflation and fees and stuff, closer to 4%. And that's the expectation for equities for the next few years. And it's the simple way to look at it. I feel like simplify until you can simplify no more is look at the current dividend yields today on most US equities or most even Canadian equities. It's on average around a 1% dividend yield, and cash flow growth or earnings growth is usually between 2 to 3%, and then you add that inflation base that the Federal Reserve is telling you they're trying to meet of 2%.
Exactly. Yep.
You get to around 6%, but net of taxes and stuff, it's 4%. So yeah, it's like for now, yes, equities will be priced in at this point because people are expecting high growth.
Yep.
But when you bring in the realities of where we are economically, it kind of takes, as I was actually going to ask Vishal after he was done, if money is flowing into unproductive assets like that for this long, what's happening to those, companies that do need that money to actually grow and provide that value, not just these inflated prices. There's a quote from a guy from 2000, before the dot-com crash. He was testifying in Congress, and he said, I find it interesting that in America right now, we have no oil fields, we have no this and that, but we have an overcapacity in cable fiber. And this was just before the dot-com crash. He's saying money was not flowing into the stuff that's most resourceful.
Yeah.
And you can only expect equities to underperform when such an asymmetric return is kind of happening.
Right.
So that's my take on that.
I mean, well, we talked about this in the past. Markets are disconnected, from reality, right? There's a difference between now the real market and the stock market, and it's a great segue because we're going to cover the jobless claims and the Bank of Canada. But it's two things, which I've been talking about in the past, right? Markets, in my opinion, are moving higher because there's nowhere else to go for yield. You got to remember retirements and pension funds, which is, again, very scary in my opinion, because historically, when you're about to retire or you're close to retire, people would tell you not to put your money in stocks because it's very risky. But now you can't make that money or that return in government bond yields unless you're pricing in negative interest rates, which again, now bonds are being held for capital appreciation, which, we're going to talk about here because apparently the Bank of Canada might be doing a micro cut, which is actually bullish for Canadian bonds, right? So if you're buying Canadian bonds, you will make money on lower interest rates. But historically, again, you held bonds, or pension funds held bonds because they were very safe and, you made that consistent yield. You can't do that anymore.
Now, because of that, because you have to actually seek your yield on the stock market rather than through the banking system, and everybody is changing, their way of saving because of that. What happens when everyone goes to get their profits? Because when you go to a bank, you can just take your money out of the bank. But when you take your money out of the stock market, you know what I mean?
I do know what you mean. And this is just, I'm not saying this is confirmed, but a lot of people are mentioning this. The central bank steps in and buys it. They will be the ones that will buy or take the positions off of these pension funds, whether it's through, secret offshore accounts. When these pension funds want to sell positions, it will be the central banks which will buy them off the pension funds and keep them on their, secret balance sheets. We've seen something similar like this in Switzerland and in Japan, and this is it, right? This is now pretty much a managed economy because
central banking in
because
the world.
if we do see a very, very large decline in stocks, we're going to have issues with retirements and pension funds. And that's why that's part of the game. But like I said, when that time comes, we will be ready to short since we are
everything that's there.
And
actually, with Gayla's point about that mass withdrawal in a market, we actually have a live case that's still going on close to 10, 20 years now. Wait, 2008. 2008, outside of the housing situation, the mortgage-backed market experienced such a massive withdrawal of capital. And the Fed is not known for buying, let alone bonds, corporate bonds. It went into mortgage-backed securities. And these are complicated instruments that some of the people who underwrite them don't even understand them. and they bought a large portion, they levered up, and in that process, they put Fannie Mae and Freddie Mae into conservatorship. And these companies have been essentially run by the government for the last few years, and the Treasury has accumulated a cash pile of $130 billion from these two companies. And it's just showing you economics and finance have completely changed. We have no idea what the Fed is willing to do to actually prop up the economy when such a massive withdrawal comes in. They probably will end up buying maybe not actual equities. They won't put a bet on Tesla or ETC, but they will buy indexes and mutual funds and the more passive instruments that are used by a lot of the retirement things.
So again, remember, the Fed's not officially doing that yet, but the Bank of Japan and the Swiss National Bank and I believe the European Central Bank, they are officially buying ETFs and stocks. I mean, the Bank of Japan owns like 90%, I believe, of Japan's ETFs, right? So again, this is, it's not free market anymore, pretty much. And you got to ride this, right? In my opinion, we got to take advantage of this, really. And, I think that's why you're seeing craziness like this. More craziness. U.S. jobless claims jumped by most since March, approach 1 million. So again, folks, remember this whole idea of an economic recovery, very likely not the case. If I recall, the new president is going to shut America down for 100 days. So just think about what that's going to do, how many more jobs are going to be lost again. And we are now over 60 million jobs lost in the US, right, due to COVID, due to lockdowns. We've surpassed Great Depression numbers. Even by some miracle chance, if America net gains 1 million jobs per month, it's still going to take more than 4 or 5 years to get back to where we were pre-COVID levels, right? So I think this is what a lot of people have to keep in mind. And it does mean, and we've talked about this in the past, more cheap money, more money printing. It will not stop, and it actually cannot stop because the real economy is pretty much collapsing. And we've talked about the currency war, right? That's historically what central banks do. To try to create inflation, they're trying to weaken their currency, so it takes more of the weaker currency to buy something, causing this price inflation, causing things to appear as if they're growing, right? And warned about this, the currency war, why we've been looking at the dollar and all these other currencies And it looks like next week, the Bank of Canada is expected to make their next move in the currency war, where they are expecting to do a micro rate cut. And, we've talked about this in the past. There are three ways for a central bank to weaken their currency. One is just through rhetoric, which is why these press conferences are, people pay a lot of attention to them, because any single word they say will be like, oh, okay, the loony's going to do this because the central bank's going to expand on their balance sheet or do this and that will tend to move the price of the currency to where the central bank wanted it to go without actually doing anything. And then the other two options are, of course, quantitative easing, which is money printing, or buying bonds to suppress interest rates but adds money to the system, and then cutting interest rates, right? So central banks already are close to 0% interest rates. Negative in Scandinavia, in Japan, in Europe, in Switzerland. And the UK is looking to go negative by June of this year, but I think it probably happens much quicker or much sooner. Canada is at 0.25, and they are going to do a micro cut, apparently, which will take us down maybe to 0.10. So it'll be 150 basis points. Just to let you guys know, the Bank of England and the Reserve Bank of Australia actually did the same thing. In November, the Reserve Bank of Australia cut its rate by 15 basis points down to 0.1%, and the Bank of England did the same last year in March. So, we're pretty much close to zero. This sort of just seems like a desperate move, really. And where do you go from here, right? Negative interest rates. And this, again, folks, is that currency war, because this is the US dollar, Canadian dollar. As you can see, with a weaker American dollar, the Canadian dollar has actually been increasing. So again, folks, when price is moving up, the base currency here, which is the US dollar, is increasing or appreciating. When the currency is moving down, the second currency here, which is the Canadian dollar, is increasing or getting stronger. So the loonie has actually been getting very strong since March of last year, which is not what the Bank of Canada wants, which is also not what the European Central Bank wants, right? So I've been talking about that and how they actually increased their QE, and the currency never, it went up rather than decreasing, and basically Europe might have to cut deeper into the negative to try to force the euro to weaken. And it seems as if Canada is in that same boat as well, and they're going to try to cut interest rates next week. I'm not going to say it's going to happen, but a lot of people are writing off negative interest rates right now. But maybe they surprise us and go to negative next week. But I think if we knew that, that would cause quite the decline in the loonie if that was called out. So central banks generally don't want to surprise markets like that. They like to give a little bit of like a little leeway there, just to let people know, hey, look, it's coming. But this is the currency war, folks, what I've been talking about, and I think this continues. But similar to what we were talking about on the dollar, right?
True.
Yeah. But on positive news, you guys remember this? On Equity Guru, I talked about BlackBerry. Members of our Discord channel also probably are annoyed now, but I always been talking about BlackBerry. Here's the positions that we entered and added to our position. And BlackBerry has had quite the pop. We did gap up again today, and now we are actually pulling back, and look where we are seeing buyers step in at the previous resistance zone, now support. And yeah, I'm very excited about this. The news was BlackBerry selling patents to Huawei, but of course, I'm liking their QNX, which is their autonomous vehicle system. There's some rumors that maybe NIO gets involved with BlackBerry, and also some rumors that Apple's vehicle, which is going to be coming out 2024, 2025, could potentially be using BlackBerry's QNX system. So it's a stock that I enjoy. Colin, I think you grabbed some, didn't you?
I did not. Luckily I did recommend that my dad did, so I think he owes you a beer.
Awesome. Batika, how about you? Do you like BlackBerry?
I like Blackberry. I didn't pick up any myself. I didn't get the chance to. But I've always liked not always. I've liked the new management that's kind of changed
Mhm.
the whole outlook of BlackBerry. And I think this Huawei move is a pretty big indication of that. Right? A turnaround in let alone America and in Canada is not that easy to do.
Yeah.
And here is a company actually doing it profitably. So yeah, I like their prospects, their short-term prospects.
Yep. So I do like them, and I think the story is exciting as we go on. But TK, do you want to maybe mention or talk about this company here, GameStop?
GameStop. Ah, yes. This is a classic cigar butt. You know, it's a Buffettism where it's this icky little thing on the street. You pick it up and it has one good puff left, and that puff has all the profit. And people don't do that today. Obviously, that's like a thing from the 1970s, but
Really?
it's the same thing. It's I hope so.
I'll put it back.
It's essentially the backing behind GameStop is this guy Bill Murray. I
Okay.
forgot the name. I think Sequina Management is the name of his fund.
Okay.
But he owns 11. His fund owns 11%, or he has 11% of his capital invested in the fund.
Okay.
And yeah, it popped on news of some of the game stuff that's happening right now, and I have not much to say, but he has reduced his position significantly since then. But people were telling him he's wrong for a pretty long time.
There
And
was also a one Dr. Michael Burry as well, I believe, who was long this stock.
as well, yeah, as well. So it's like, wow, you know,
Yep.
if so many of these contrarian investors are going in, it's a good stock to get in. But I think the one that, and I'm really sorry to our watchers for always bringing this company up, but the one that I was watching now because of such a long bet is Tesla.
God damn it!
Do it.
I bring it up again because the same guy who made this long-term bet that GameStop was going to have one more good puff
Yep.
is making a bet that Tesla's stock will plummet, the reverse of a rocket,
Yep.
come back to earth, to reality. And he is known for holding positions
Very long.
that are contrarian to the general consensus at the time. But I believe, you get in the moment, there's no difference between being wrong and being early.
Mhm.
But he understands the dichotomy between that, and somehow he manages. That actually should be the book for investing. Somehow you manage, but he's in there, and I would now start looking at Tesla as well to be like, okay, is that something I would want to? I wouldn't short it, but I would buy puts. But you kind of have to recognize he held GameStop since, I might be wrong, but for at least 2-3 years now, he's
And
been
we all
holding
know the
it.
story about the housing crisis.
The
Too.
housing crisis in 2008, he held that for 2-3 years before it happened.
Yep.
So I am looking at Tesla a little more with a little more heart now, that it might give some profitability to me at some point. But I'm making a bet that it goes down, and I will be wrong for as long as possible. I want to see the man's net worth shrink.
But basically, what you're trying to say is don't bet against Dr. Michael Burry. He's been
Yeah,
pretty.
I think he's been pretty. I think it's what's his name, Ray Dalio.
Mhm.
Yeah, he has, I think, $250 billion under management. He says in investing, if you have a two out of three strike rate, you're phenomenal. That's about 67% strike rate. This guy is kind of heading to the 2 to 3 now. So I don't know if this is the one. That's gonna not go well, but it'll be nice to kind of see how that happens. And I'm not gonna take just full disclosure. I'm not gonna take the short myself. I don't think I want to.
Like, he has the ability to hold his shorts for a long time, sort of like Jim Chano. So a lot of these short funds, they have
They
that
have the
luxury, I
money
guess, right?
to
To be short and
true
hold their position for quite some time.
for a longer period. And it'll be so beneficial for a fund like his expecting. So he's basically saying the market is overvalued. He might be making a bet on Tesla, but Tesla basically is the market right now.
Well, that's it. That is it.
And he's like, hey, the market is really expensive. I can't find anything of value that I can buy cheap. So I'm going to go buy expensive, but on the opposite bet. And if my total portfolio goes down by 30%, I can only hope the big guys who are super overvalued go down by more, giving me a net gain of 4% when the market is down 30%. It sounds stupid when you when you look at it, but it's like I rather judge investment managers during a bear market than a bull. If and I think he's done pretty well so far, and that's a bet he's making. His GameStop position returned 500 and something percent.
Yeah, crazy.
He bought it at an average price of $5.
But realistically, there is really only one good puff left in the GameStop. It's just like Blockbuster, right? It's the last part or the last vestige of physical distribution of games. And digital distribution is just going to step in, like Netflix, and just take it down.
It'll be actually an interesting sample from us.
Well, exactly. And further to his argument about Tesla, we had just discussed right now about BlackBerry being involved in the data. And the fact that they're involved in data, that was one of the pillars or linchpins of Tesla's game plan, was the fact that they were going to be the treasure trove of auto driving information, right? And no, BlackBerry, all these other guys are tuning into this. So, I mean, very much so the value proposition of Tesla, as the market itself matures and other competitors enter, is shrinking wildly.
True.
Right? So I like you said, I have a feeling that Burry's right, although I don't have the money nor the cojones to back him up monetarily on his bet.
We'll just watch and ride his coattails for as long as possible. I behind every intelligent investor is me smiling, riding their coattails, because hey, they have the capital to put their money where their mouth is, and I'll be willing to ride some of those coattails.
Exactly.
All right, Maddie, sorry about that. That's it from TK and I.
Awesome. Okay, I'm just going to pass it over to Colin to finish this off.
Hey, yeah. So cannabis stocks have been moving. Unfortunately, I wasn't here last week when the real action was underway. But the big catalyst there was that surprise Democratic sweep of the Senate, which had some people kind of upset. I don't know if you guys heard about that or not, but so that's got some big implications for the space going forward. For those of us who kind of follow the space closely, we know that there have been different cannabis bills that have gone to the House for votes and have kind of gotten that bipartisan sort of universal support, but haven't actually seen the Senate for vote, just because we had Mitch McConnell and the Republicans in control there. So with the Senate being controlled by the Dems, I think it's safe to say we'll see some more progress out of the political system for U.S. cannabis.
Can you give us some companies you're watching?
I mean, so that's the next thing I was actually going to talk about, and one thing that we're actually seeing is that lots of Canadian LPs are actually running a fair bit harder than the U.S. companies in a lot of cases, and I would look at APHA or Tilray is a good one too, but yeah,
APHA, I believe, just had surprise earnings too.
Yeah, and I mean that's a great example of a company out of Canada that's posting like nine-figure revenues, but they're also posting nine-figure losses. So you look at MSOs who are putting up those same kind of revs, but are actually profitable or very close to. So the thing to kind of know about this is that even though these MSOs are multi-billion-dollar publicly traded companies, they are still technically, for now, operating in a federally illegal business.
Right.
Because of that, they have to trade on the CSE and the OTC, which are kind of the junior exchanges.
Yep.
Where the Canadian operators are able to list on exchanges like the NASDAQ and the NYSE or even the TSX.
Mm-hmm.
So I guess the thought process with this shift in the Senate is that maybe the conditions for these MSOs to be listing on the NYSE or NASDAQ or TSX. A good example would be Curaleaf Vishal, or Harv, or Cresco Labs, or Green Thumb. Those are all good ones. So once that happens, when these guys can list on the bigger exchanges, that's where I think people are going to want to be. It's kind of a pretty obvious choice in my mind.
Do you feel like there'll be some of those companies that do come out of this better than the others once people start, looking deeper into it and having more information about what they do? Do you think some will be winners and some will just not move or not even go for the listing on the bigger exchanges?
I mean, the safer bets are those kind of top 4 or 5 MSOs, and that's Green Thumb, Curaleaf is another one. Cresco Labs, True Leaf out of Florida is probably the gold standard. They're kind of super profitable, making tons of money, absolutely dominating the Florida market. So one kind of topic that gets spoken lots about when a sector moves like this is M&A. So probably see quite a bit of that going forward. And in terms of winners or losers, that's always tough to say.
In the moment, that's true.
Yeah.
But yeah, there's so much opportunity there, and with the way that the pandemic has kind of created like deficits across the state level and the federal level, it's kind of a no-brainer for the states to kind of allow these businesses to flourish, so that they can maybe fill a tiny portion of that gap anyways. So yeah, needless to say, I'm very excited about cannabis in 2021.
And we talked about it in the past too. I mean, like it would create jobs as well, right? So I think that's also a big plus.
Filling in that role. That's true.
Yep, absolutely.
Awesome. Anyone, last remarks? Want to impart final word of wisdom?
I should remind people, U.S. markets are closed on Monday for observance of Martin Luther King Jr. Day. So it will be a shortened week next week.
True. My last thoughts. Meek Mill posted on Twitter that his portfolio is up, so we should probably sell everything.
On that note, I am going to finish this off. Thank you so much for tuning in, and we will see you next week.
Thanks, everyone.